Happy Friday, everybody. It's Rod with Pow Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Also home to the best MJ community. It's Friday, as I mentioned, November 17th. Hope you're doing awesome. And in this video, we're going to be doing an update with regards to news and Canopy Growth stock. We're going to be discussing BioSteel news that came out today. They did obtain a court approval during this process, and then also wanted to touch on the SEC red flag that they raised, that there was a detailed article from MJ Biz Daily on this topic. It wasn't new. They did mention it briefly on their recent earnings call. So it was brought to light, and then there was a more detailed article that was published yesterday. And again, a lot of people don't really pay attention to the conference calls, or may not have joined it, or may not have heard that specific mentioning during the call. So we'll go over the article and my thoughts and opinions on this. But essentially, it's not a huge issue at this point. It basically just means that it's on pause for now as they sort out some of those, iron out the kinks sort of things, sort out some of those issues, right? So before we get to it, make sure to smash the like. It helps support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or whenever I go live. Also, make sure to give us a follow on X, which is previously Twitter. The handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So this was the BioSteel news from today. Canopy Growth announces that BioSteel obtained court approval of successful bids in the sale and investment solicitation process. So the court approved combination of transactions resulting in the sale of all or substantially all of the assets of BioSteel Canada and BioSteel Manufacturing. Elimination of funding obligation to BioSteel consistent with Canopy Growth's MJ focus and transformation to a simplified asset-light operating model. So the Ontario Superior Court of Justice under CCAA Court has approved two transactions to sell all or substantially all of the assets of BioSteel Canada and Manufacturing, and that pending the closing of the transactions, Canopy Growth expects to realize proceeds which will improve the company's balance sheet. So this is all a move to cut back on their losses and improve their balance sheet. We know that BioSteel has been one of the main drivers of losses in the company, and they're just trying to cut ties with they're trying to focus on profitability and, like I said, becoming an asset-light operating model. And it's starting to improve so far, but we did see part of that. There was still some lingering BioSteel losses in their recent earnings, which they did mention on the call as well. But over the next few quarters, we should start to see the fruits of this labor, and the move that they're making should start to show up in the financials and in the balance sheet, right, with regards to the company losses. So on September 21st, CCAA Court granted an order authorizing BioSteel Canada to conduct, under the oversight of KSV Restructuring Inc., in its capacity as court-appointed monitor of BioSteel Canada, a sale of investment solicitation process, the SISP, in accordance with the terms and conditions relating thereto, the SISP procedures. So pursuant to the SISP, two transactions were identified as successful bids. So the sale of substantially all of assets of BioSteel Canada and then BioSteel Manufacturing. So the court has approved the successful bids and granted authority to consummate the transactions contemplated therein pursuant to the terms of the approval and vesting orders issued by CCAA Court in respect of each of the sale transactions. So this is some comments from Judy Hong, the CFO of Canopy Growth. We are pleased that this process has identified two qualified buyers for the BioSteel brand and assets. The elimination of the operating loss and cash burn as a result of ceasing to fund BioSteel has already significantly enhanced Canopy Growth's financial position, and the anticipated proceeds of the sale transactions are expected to improve Canopy's balance sheet upon completion. So again, that's great to see. So they go over the overview of the BioSteel Canada transaction. And then it's going to be subject to customary closing conditions and an order of the U.S. Bankruptcy Court recognizing the approval of BioSteel Canada transaction. Then they go over the manufacturing transaction details. But you can check that out on your own time if you want to learn more about this. I want to move on to the next article here with regards to the SEC. But Canopy Growth remains as BioSteel Canada's largest creditor and shareholder. So again, I think this is a necessary step in the right direction to right the ship and to focus more on, like I say, that asset-light operating model. It's something that, companies, LPs specifically, tried to be everything to everybody. And we know that Canopy got into retail as well. And I just think that they had way too much stuff going on. And then instead of focusing on one key aspect of the industry or the business, they were just trying to be everything to everybody. And as we've seen throughout the rollout in Canada, that isn't exactly the best option. So I think this is a great move overall. And I do love the product, though, the brand BioSteel. So it is a little bittersweet, but at the end of the day, I think this is going to be the best move forward. And then speaking of moves forward, they are working on the Canopy USA entity. And then they mentioned this during the conference call, but there was a article here from Matt Lamers at MJ Biz Daily that goes over the specifics. I'm not going to go over the entire article. Most people have probably already read it by now, but I did want to give my thoughts and opinions on this. But essentially, TLDR, it is on hold while they kind of figure out another way to circumvent this, right? So SEC raised red flag over part of Canopy's plan to enter the US MJ market. So Canadian MJ producer Canopy Growth Corp appears to be facing another hurdle in its plan to fast-track the company's entry into the $34 billion US MJ market. So the SEC, Securities and Exchange Commission, earlier this month notified that Smith Falls, Ontario headquartered company that the agency staff is opposed to the deconsolidation of the new US-based holding company, Canopy USA, that would own 3 well-known American MJ companies that Canopy Growth has agreed to purchase. So deconsolidation refers to Canopy Growth presenting its own financial results in the same disclosure as the pro forma financial results of Canopy USA's US-based assets. Canopy disclosed the SEC's objection in the November 9th news release and announcing the company's second quarter results for fiscal 2024. The disclosure suggested that the SEC's objection is significant enough that it could take Canopy more time than anticipated to finalize the structure. And keep in mind that this is something, the NASDAQ's involved as well, right, with the regulations with regards to rules and regulations with regards to the NASDAQ. And then there's, the oversight and the SEC, right? These regulatory bodies that have to get sign off as well. So there's a lot going on here. It's not just as clear cut or black and white as most people would think. And then there hasn't been any other licensed producer that has done this in the past either. And remember, if you're entering the US market, you can't touch the plant if you are listed on a US major exchange like the NYSE or the NASDAQ, right? So this has a lot to do with Canopy and the NASDAQ and then the SEC, right? So there's a lot of moving parts to this. But like I said, if they end up getting this done, it's going to be massive, in my opinion, will be absolutely huge for the company, but then also for the industry, right? Because it's going to give a blueprint and a pathway for a lot of these other companies to do a similar type of structure, right? So the 3 US companies are New York headquartered multi-state operator Acreage Holdings, and then Acreage also has a big footprint in Ohio, which we know that voters approved MJ legalization for adult use, the 24th state to do so. So that'll be huge for the company as well. They also have California-based extractor Jetty Extracts and Colorado headquartered edibles maker Wana Brands. And then Jetty also released a new vape that I think they were in like number 3 market share just after a couple months after releasing that product. So they have the initial 2024 timetable. Canopy initially had hoped to complete its overall plan early next year. The SEC's objection comes a little more than a year after the NASDAQ Stock Exchange voiced its own objection to Canopy's plan to consolidate the financial results of Canopy USA with those of Canopy Growth. The deconsolidation plan with the SEC opposes is a key feature of Canopy's effort to overcome the NASDAQ's opposition to the company's original financial consolidation plan. At the time, the NASDAQ's challenge raised questions about whether Canopy could maintain its listing on the exchange if it proceeded with its initial plan to consolidate the financial results of Canopy USA with those of Canopy Growth. So CEO David Klein said the SEC's objection in a conference call with analysts last week, so I mentioned on that earnings call. As we continue to work closely with the SEC to advance this novel structure, we have been in active discussions with the most recent communication indicating that there is more work to be done to enable us to deconsolidate the financials of Canopy USA, Klein said. And if anybody can get this done, it's Constellation Brands backed Canopy, right? We know that they've got a massive, billions of dollar investment from Constellation Brands. They did expire their warrants though, and they said that they had no plans to do so. And this could be part of that, right? Maybe they seen this coming and they think that it's going to be a little while longer. Maybe it could be a year or two before we really start to see any movement and entry into the U.S. market, and certainly with the lack of regulatory reform at a federal level in the U.S. Right. So again, it's kind of all coming together a little bit here, but in my opinion, long term, there's nothing to worry about. In the meantime, Canopy said its plan to speed its entry into the U.S. market isn't hampering Acreage, Jetty, or Wana operations, which involved focusing on key states that offer the most potential for growth. And like I said, Ohio is going to be a big one there if everything does go smoothly. So they talk about the strings of deals, and then the SEC weighing in. So on November 9th earnings release, Canopy Growth said it had received a letter on November 3rd in which the SEC essentially said it's opposed to the solution to the NASDAQ issue. The staff indicated that despite the reorganization amendments, it would object to the deconsolidation of Canopy USA once Canopy USA acquires Wana, Jetty, and fixed shares of Acreage. Canopy Growth said in a regulatory filing last week. In the filing, Canopy Growth said it's currently assessing additional structure amendments to Canopy USA that would facilitate the deconsolidation of Canopy USA from the financial results of the parent company, Canopy Growth. So a Canopy spokesperson couldn't share a specific update on the timeline with MJ Biz Daily. So again, this is basically, long story short, it's just on hold for now. But again, this is a novel structure. Like they said, this is something that hasn't been done before, and it definitely complicates things, right? There's a lot of moving parts. There's Canopy USA, there's Canopy, the parent company, there's the NASDAQ involved, and the SEC, right? So there's a lot of moving parts here, and it's hard to please everybody. And I wouldn't really expect this thing to move along very, very quickly. You know, if someone would have asked me, do you think that this would be a fast process? I would have said absolutely not, right? Because like I said, usually when you're dealing with regulatory bodies, there's a lot of hurdles, there's a lot of complications, there's a lot of, red tape, and quite often they take forever. So just look at some of the prior lawsuits and things like that the SEC has gone after, and look at what it's doing with regards to crypto. It's behind the ball there, while tons of other G20 countries are crafting clear rules and regulations. And look at Canada, already 5 years legal here at the federal level, and the US still can't even figure it out, right? So there's no clear pathway to even safer banking or rescheduling, right? All this stuff is happening, but it's very, very slow coming. So again, there's a lot going on here, and a lot of moving parts. So we just kind of have to be patient. This is basically on hold for now. And then, like I said, basically offloading BioSteel is going to be great for the company, I think, as a lot of this U.S. strategy is likely going to be postponed. And as we await federal legalization in the U.S. and reform in the U.S., this is going to be pivotal for the very, very imperative for the company to focus on being, asset light and focusing on cutting costs and driving growth and profitability. Because like I said, they need to get creative, because it could be multiple years before we really start to see the fruits of the U.S. labor market, right? So, but yeah, it's unfortunate, but it is what it is. It's not the end of the world, in my opinion, and it was to be expected. Definitely, like I said, when it comes to dealing with the U.S. government and regulatory bodies, it's definitely going to be a long, drawn-out, lengthy process, right? So, all right, hopefully that was helpful. Let me know your thoughts and opinions in the comments section below. But going to end it there, it's Rod with Power Group. Thanks again for joining us on the Pursuit of Wealth, and we'll see you again on the next video.